All right, welcome everybody. Here we go. We are actually unexpectedly already in our £1,000,000 short position against the USD on the pound. And I did not expect this to happen this week, but it hit our entry target or it hit our entry point and we are short. So this aligns right with the 75%, the ultra premium of this past month's, basically the past month's dealing range. And so for the start of Q3, we pushed right up into that. And per plan, we are now short. So this is a 17R trade that we're expecting to be able to hold all the way down to 126-ish, 125,863, which is back to this repricing candle and into a super discount. Now, it may take several weeks to get there, maybe a month or two. But this is supposed to be meant to be a long-term hold at 17R trade. So while I did not expect it to happen this week. We pumped in there and we're short. So we will see. It's a low risk trade for a high reward. So we're hoping that that plays out. But now we can get on with the other analyses that were slated for this week. All right, on the dollar and USD Forex pairs, we've got, you know what, I'm going to use my old chart, the dollar, so I don't lose all these arrows I had. Okay, so on the dollar, weekly, we did expect a red week this week and a tap of the top of this range. That's pretty much exactly what happened. I don't expect this red candle to be touched. I expect to leave a gap here. So for USD, I think, what we can maybe expect is something shallow to sweep last week's low, and then we're headed higher. So for the dollar, that's pretty much the analysis. It's going to be quick this week. Last week was much longer, and we had a lot to cover with the end of Q2. Now that Q3 has started, it would be interesting if this is the only real manipulation wick that we have for the quarter, and it's really going to be a banger of a quarter, which is entirely possible. We had this year-long consolidation, so there's no reason for price to necessarily, now that we've broken out, there's no reason for price to hang around here too much. It's really intended per market makers to accelerate this out of here and trap anyone that was trying to be short here in the position so that they can just distribute long positions to those short hands all the way up, at least to this high, into this gap. And last week we said the analysis likely puts us above the 50% here, which is into at least this 3-month gap and probably higher. If we took a 1 standard deviation extension from this year-long consolidation, we're way up here and into this sell side imbalance. So the first target is almost achieved here at this wick, and then 50% of the dealing range is right here at 102.885. I expect this entire imbalance on this buy side breaker to be pushed through into this 3-month imbalance at least, if not a bit higher into the 618 retracement or the midpoint, if not higher to the 75. That would be the highest I want to see it. So that's a recap of last week's look ahead on the dollar, where we have this 2-year range that we've basically, now we're going to attack some of the premium levels within this 2-year range. What does that look like on the euro? Well, we've started to lay that out on a weekly basis, and we thought maybe euro could climb as high as sweeping the liquidity of this down close candle that broke some structure, so into this order block. It started up, and I'm not sure that we're going to get too much higher in here, but on a weekly basis, I'm going to show you this Euro GBP chart. So Euro GBP just started to exit this whole range, which lends me to believe that we're going to get a bit of a bounce on the Euro GBP. So that's one reason I'm not terribly concerned that the GBP already hit our entry point on this short. So if GBP was slated to be stronger against euro, I'd worry that this was going to get blown out. But because GBP had such a strong week against the euro, I do think that next week we could see some of the euro reclaiming I'm going to go back to the euro chart. We could see some euro reclaiming some of that ground against the pound, which would mean that the pound against the dollar is going to be a weaker play than the euro against the dollar. So I would expect a little green candle in here next week, similar to what we saw here on the dollar, where we had a red candle to just kind of balance out this price as we left. So if euro GBP has a bit of a green candle, then euro has some more room to the upside to potentially tap into this order block, the breaker. There is a weekly gap here. Okay, and there's a bigger weekly gap up here. So those were some of the upper targets we were looking to start to get short again on the euro. And I do have my alert here, which is right at the middle of this order block. So that would be kind of the highest I'd want to see euro go before it should really start to tumble. It's possible we get up to the 618 and liquidate the body of this candle, in which case I'll definitely be shorting euro. So, you know, euro has a little bit of room to run against the pound, it looks like, which may mean it has a stronger push this week. So, you know, for euro, then this could certainly be in play, where we start the week with a bit of a push, and then we can start this cascade to the downside as the dollar strengthens for the shorter term, you know, month, 2 month, 3 month time frame. On the pound, then, what does that look like? Yeah, we've got a lot of drawings here. So again, it pumped right up into our short position, and as scary as this looked, and as much as I didn't think it would happen this past week, it happened. So I entered the short, and we're in it right now. I'm going to hide those just so they don't clutter up the chart. So the short position's going away. I'm going to hide the trading, hide all that stuff, hide the execution marks. We don't need those. Okay, so all that's gone. On the pound, right, we ran right up to the super premium of the last 2 weeks dealing range. And take a look at this. We're going to drop to the daily chart. It looks like we're still going. Okay. Oh, no. Reconnection successful. Okay, sorry, we're back. So the streaming software took a breather there. All right, I don't know where we cut off, but anyway, we've come back right into this buy side imbalance, right into this weekly gap down, and nicked those with a couple wicks, and we're back to the middle of that gap. So this is what we wanted to see. Frankly, I just didn't think we'd see it that fast. What I'm going to do here is just shrink this back for a second, and I'm going to draw another box on this sell side imbalance that we have here on the daily time frame. So we have not quite completely closed that in, which is fine. I'd rather not see it now that we're already short. I would like to keep that open and continue flush to the downside. That said, if we are stopped out, I will be looking for another type of rejection here, where, you know, maybe on a 4-hour basis, if this does get run out, because it is a relative equal high, but we're in the imbalance, so I kind of expect this to hold right now, and that hit the super premium. You know, at a worst case scenario, something like this happens, where we run these out into, you know, take the liquidity of this candle that dove down below and broke some structure. So worst case scenario, we wick up here. There's not a lot of news this week, so I can't really see that happening. But if it does, that's what I would be looking for, where we'd see a sweep of these and a close back in below the bodies, below the midpoint of this sell side imbalance here. And then I'd be looking to take it short again. So that's why I was saying last week, a couple of bullets here for a 17-hour trade, 18-hour trade to the downside. You could even get higher. If you see this rejection happen, then it's very likely that you'd even have a better entry point than what we got. So if I put that short position back on here, right, we're right here, and this is a 17-hour trade. But if you see this rejection, and that rejection happens somewhere, you know, down here, your entry might end up being more like at the midpoint of this gap or something. and that is another 17R trade. So again, if you want to risk 2R for this massive short to play out, pretty soon once you're below this gap, you could probably put it to break even. We're almost. If I see this week close without taking last week's high. Dang it. All right, if I see this week close anywhere in here without taking last week's high, then I could pretty much move this to break even. And if it does come back and knock us out, then we can re-enter again with the same criteria. But, if we don't take out last week's high, because it is a light news week, but there's some GBP and Euro news. We may just be able to move this, at least lower the risk, afford ourselves another bullet, and call it good. So there's not much here to analyze. At least worst case scenario, again, we knock this out and then we're down. So I would be looking to reshort if that happens, and it happens to stop us out. It may just actually knock out last week's high and then start coming down. The other possibility is that we just make a little trip up into these wicks, and then we start the flush. So, there's very few scenarios here on pound that I'd be looking at. It's pretty much all short against the dollar. Same with euro. So, yeah, I pretty much see either a light retracement into last week's wicks and we don't take last week's high, where euro sure looks like it should take last week's high based on the Euro GBP analysis, where if we get any sort of retracement into this sell side imbalance breaking out, then the euro against the pound should show a willingness to break last week's high. And last week, euro didn't even make it into premium of the same dealing range as on the pound. So this dealing range on the euro, we just nicked the 50% mark, whereas the pound actually went all the way up to 75, right? So hence the major dip in the euro against the pound here. So on the pound, we hit the extreme premium 75% of the last 2 weeks. The analogous dealing range on the euro, we barely touched the 50% mark. So we weren't even in premium. So I expect euro this week to make a run up to at least the 618, probably into this sell side imbalance. And if we are to draw that out, just under the consequent encroachment of that, the midpoint of that, it happens to be the extreme premium. So at the worst case, we close in this sell side imbalance with a wick. The bodies stay here at the 75, and we can look to be short euro as well as pound. That said, euro last week met our objectives to the downside. We had a short coming in from here to here. So that short position was on the table from last week. We were like this, and this short completely played out to specification. Yeah, so we nailed that, and we could be ready here to take another short on euro. I would look at entering somewhere here. If you put a stop above that candle, great. And again, the targets to the downside. Now that we're really leaving this range, right? We've broken down, we've retested. We're really at the last point of supply here on Euro USD. So we should be targeting the 110 zones, and that's already an 8R trade. And if you're taking it where we project it even further down to here, you got a 12R trade, and that's a sizable amount of risk. I think if you're not even looking for that gap to fill, then you could get up to a 24R trade here. So that's pretty awesome. And if you do scale out, obviously you take some of those R off the table as you scale out of a position. But for the most part, this is what I'm going to be looking to do next week on euro. I'm hoping it cascades up here against the pound. and can show some willingness to dump lower. And I think we'd get a reaction again here around the super discount of this region, or a 1 standard deviation from the last 2 weeks. And then we get a bounce, and then we can break through that with a displacement. And then we continue down to take out this low into this weekly gap or 3-month gap. So yeah, on a weekly basis, this was a balanced price range. That's kind of as low as I expect it to go for the euro. And then I think we might have a quarter of consolidation, and then we should see a reversal. So on higher time frame for euro, we can take a big short here, look for a reversal, and then we should be winding upwards. Taking a look at gold. So I know there's been a lot of hype on gold, and I still think the bottom is nowhere close, right? We've just had a little bit of action around this gap down here on the weekly basis. 2 candles up. If we have another bit of a wick up, I do have an alert here at 4213.2, and that would essentially be a retracement to I think 618 of this dealing range from the last 3 weeks. But either way, I'm only looking short gold until we're back here to 3650, really. So this whole run up is primed and ready. Once we've broken down through here, we had a displacement through the 50% of the entire range here. So from this low back here, all the way up to the high, we displaced through the 50%, and now we're consolidating kind of around the middle third here. So this is a nice formation of an order block. To me, it looks like an order block that will dump again to at least the 3650 mark and likely be taking out these lows. What does that look like on a daily basis? Yeah, gold had a nice reprieve week. So if people think this is a nice double bottom and it's time to be long, I really don't think so. Yes, we swept some liquidity. However, this whole market maker sell model is what's in play here. So can gold have a massive run up here to take some of this relative equal high with an imbalance? Yes. However, that was already at the 50% mark coming down. So it's hard to think that we're actually going to get that much bullish momentum on gold to do that. The only thing that would indicate to me that it might do that is that this high over here, if it were to have a corollary on this side, it probably could happen in this vicinity, right? So if we're looking at gold, the best case scenario for bulls would be to take out these relative equal highs into this imbalance, kind of matching this high on this side. So as a best case scenario for the bulls, again, that's where gold could tap this week. But like I'm saying, I don't see that as particularly likely. Even if we are to take this dealing range from here to where we've just established, that would put you exactly at the super premium. So it's certainly possible, right? I wouldn't count it out completely, but gold, silver, copper would have to have a pretty fat run up in order to make that happen. And the problem with that was displacing through the 50, not being able to hold above it again, already grabbing liquidity into that gap with this wick. With this wick at the FOMC, we grabbed liquidity into that gap above the 50%, and then we dumped again. So to me, this relative equal low is just the start of another market maker sell model to continue downward. It could go as high as this, yes, into the super premium of these legs, but most likely we don't get that high. We would just look at the dealing range from the last couple weeks here. So from here to here, and the super premiums here at 42.95, 42.96. So to me, the more likely scenario is that gold hits 42.96 and then takes another tumble along with silver. So silver, again, there were a couple scenarios for where silver could turn here, and it's headed towards the super discount of 45-ish. I do think we're actually headed all the way back to clear these lows in the both sub 30 level. So as much as I'd like to be a silver bull right now, I'm not. And right, if we take these dealing ranges here, so on this dealing range, we've got a bit of a run up here in order to dump again. So 50% here. We have a weekly gap up in here at the 75. So yeah, I mean, maybe 68.3 is in the cards for silver this week. And then we're taking a dump to at least 45, 46, clearing these lows for sure, and probably continuing downwards. So my next target on silver is 46, and 50 will be a psychological mark for sure. So we'd likely get a bounce there. We do have this imbalance that we have just started to eat into. We have not reached this red candle, this high on this red candle yet. So from a 50% mark on this dealing range, we are at 64,435. From a 75% mark, we're at 68.39. So or 68.3. That seems likely. There was a weekly gap up here. And if we are just to tap the lower part of that, then we could be certainly headed off to the downside after that. If silver wants to show any more bullishness in the beginning part of next week, which I think it could. It's the beginning of Q3, and we really had a shortened trading week this week. So on a 4-hour basis, we have these nice relative equal lows. And yeah, I mean, if silver were to just come up to the 50%, which is right where this candle takes off and takes some of the liquidity here, we could, there was a gap down here. So that's another gap, right? This is a weekly gap that we can mark out where we closed up there. We opened here. This is a weekly gap. And then we also have this week's gap. So really, I'm looking for silver to tap one of these before it reverses. This one is in premium at the 50%. And because this dealing range has already shown a willingness to come through the 50%, we may just resist there again and dump. If we don't, then I could see, silver coming all the way up to 68.3, possibly wicking the bottom of this weekly gap, and then we can see a rundown. So that's the analysis on silver. Copper, I thought might be able to get a bit more bullish, but really it's not. I mean, we have this double top here that may or may not hold in the very short term. I'm already short in one of my accounts. I got short right here on this wick. And, I'm not loving it. I do have a stop above this high, which I feel like is likely to get run out if the metals are going to show some willingness to have a bullish run here at the beginning of the quarter. Then I do think, if this double top gets run out by copper in the next week or 2 or 3, then it's an all-out short because, well, we'll see where gold and silver are, but I'm pretty sure that this is going to be an all-out short on copper. What I'm seeing here is, on a dealing range perspective, we were already in this dealing range. We already hit the 75%, and we've come back below it. But I don't love the price action here with a lot of these bullish imbalances. We did have this inversion fair value gap, and we have yet to sustain a close above it. But these 3 candles really just look like a bullish order block to pop through here if gold and silver are going to show some willingness to go to the upside. We have an imbalance here. This lone wick didn't feel like quite enough. So, if I get stopped out on that, fine. I'll be looking for another opportunity to short copper, because like I was saying in the last couple of weeks, there are a lot more targets to the downside on copper that are kind of easier to see where you'd want to scale out and possibly look for bounces to re-enter. Gold and silver are just kind of flailing in no man's land. They've got a lot of downside, which is maybe a better way, maybe a better position to be in. You're not trying to second guess, where, if any, copper and is going to take a bounce, whereas gold and silver just can keep dumping. But yeah, I mean, I do think copper's got this strength behind it that gold and silver currently don't have. But we did have this nice flush through this low, through this double bottom. And so to me, it doesn't feel like copper is going to have too much oomph past this before it's going to start to follow gold and silver again. So while I might get run out on my short here already, I'll take that loss and look for a reentry after, if this high gets taken. It'll probably, show a rejection and then likely continue to follow suit with the other metals. So that's gold, silver, copper. Crude oil. We're still looking for lower prices. I really don't think crude oil is going to have great trades coming up, right? This gap is still the next target, and there wasn't any news really to have. It was a pretty consolidating week, and there's probably going to be something going where oil's going to run some of the smooth high liquidity here. So I think most of these can just move over. Just move it over. And it's still valid. So this dealing range still applies. Actually, it's a little bit lower here. So right there. And this gap is still in play as a target to the upside. Not that I'm willing to long it right now, but I think this gap is where we're headed. See, the super discount here is basically right at the bottom of that gap. So any pops in oil, I would look to short. And sure, we could get into this weekly gap, right, where we had a contract roll, and this gap, this gap looks like it would be a decent place to look for a short. The more premium gap, the more premium gap is obviously this one, and that is above the 50% of this dealing range. So yeah, I mean, if you're looking at the last few weeks, we've got this high as a high of a week, we've got this high as the high of the week, and then we're way back here. So if we're looking to get into any sort of premium, it is going to be this weekly gap from 2 weeks ago. Or is that 3 weeks ago? That's 3 weeks ago now. So that would be the highest I'd want to see oil go if we're going to be traipsing back across any of these weekly volume imbalances, weekly gaps.
Did you just post a video?
All right. Well, that breaks over. So crude oil, I expect one of these gaps to get hit this week, and probably the upper one if it gets out of hand. But anything over this, I think will be prime for a short down to fill in this gap. So it's the crude oil analysis. The indices are kind of doing what we thought. We're just in a consolidation here. We do have a few kind of trend lines if we are to, of course it's white. Okay, right, so we've got this trend line and we've got this trend line, basically forming a nice wedge. So it's going to break out one way or the other, and more than likely, in my opinion, it's going to fake out to the upside and then dump. So it's got a lot of people are still looking at, I mean, the only caveat to that is a lot of people are still looking at these, relative equal highs on NQ and thinking it has to get run out, so it must go up here and then dump. It's possible that that doesn't happen, right? If everyone's seeing it and everyone's thinking, okay, I'm going to keep longing it till we get up here, which I would love to see. I want to short it up here. I don't want to be shorting it down here, but NQ has just shown such a heaviness here that ES hasn't yet, and the Dow certainly hasn't, right? I mean, you look at this, we were looking at this last week. If Dow's going to head up to 4 standard deviations, I wanted to see it start to push off of this super premium level, and it has done that. It has closed massively bullish through this double top, past the 3 standards, and this is exactly what I wanted to see for the Dow to hit 55,000, hit the 4 standards, and then that's its reversal point. So this whole dealing range that we drew last week would be the 4 standards of this manipulation down off the BHS basis, right? 55,000, nice round number. Someone's going to celebrate that, and then we can just tank. So to me, this is exactly what I wanted to see on Dow. And what that means for ES and NQ is that, yeah, Dow might be able to pull them up some of that way, which is why I think ES is having maybe a bit more correlation with the Dow in general. ES has that ability to get pulled through its relative equal highs here to where we had projected the top of the stealing range at 77.10 a while back. So I'll just draw that back to 77.10. I do think ES has that propensity to get pulled up here, and it may go a little bit higher if it wicks through it. Okay, so I do think Dow will pull ES higher. On NQ though, does that mean it's going to take out this double top? Honestly, don't know. I kind of hope it does, right? If it's clean that way on all 3 indices, that would be fantastic. Again, we looked at Russell last week, and it too looked like it wasn't done. We're in less of a wedge here, but we are still a bit in a wedge on the NQ, right? So we're kind of in this wedge, and we're getting closer to the point where we've got to fake out and then break out, or break out something. But so it's possible NQ again that these contract roll highs hold for the time being, and we just kind of wick through here and then come down. Or if the Dow is able to pull everyone up high enough, I'd love to get short NASDAQ here at 31.3, 31.4, and just hold it through the end of the year. I do see this as a consolidation distribution where you hear some headlines of doom and gloom, but mostly you're hearing that the stock market's kind of immune or impervious to whatever bad news comes, and that's exactly the kind of news I want to hear to be the short seller into this high at 30,982 or just a little bit higher, right? The 4 standards on the non-adjusted contract, we really kind of didn't hit. I think it was supposed to be a little higher. That's the adjusted contract. On the non-adjusted contract, we didn't get there on the NQM contract. The NQU contract, just with the forward price premium, did hit that level exactly. And so that's one of the reasons I feel like NQ may not quite make it back up there. It did hit that level almost exactly. This high is 30,975. 30,982.50. So 7 handles away. I think I could handle that, but that's what's giving me pause, is that there are these nice equal highs, and I'd love to see it ripped out one more time before a true short for a long-term hold. But yeah, I don't know if the Dow is strong enough to take the tech-heavy sector up with it past this double top. So really, NQ I'm looking short. I've been short for a while, but this distribution hasn't fully played out yet, but it's about to. So Q3 is going to be the time where it's going to take some liquidity and flush. So that's my analysis on the indices. I do think ES takes its double top into what had been projected as the 4 standards before it tanks, and the Dow is exactly showing the exact strength I want to see to blow this top off to 4 standards and then rip lower. So that again is exactly what I wanted to see on Dow. And I don't know if it's going to happen this week, but with a light news week, there's just the FOMC minutes. So this is what I'm thinking on Dow. Soybean oil, not too interesting this week. I've been looking for shorts, but they really haven't shown much willingness to get too much into premium here. So I'm just kind of waiting. If it's going to show a dip, I'm not really keen on shorting it yet. I'd love to see it a little bit higher. So these still are in play. I don't think we're going to come take this double top. If we do, great, we'll short it. If we get high up into here at the base of this consolidation, I will be shorting it. Soybean oil actually still had the gap down. It showed like it might have wanted to get into this gap here, but really it just consolidated. So I'd like to see a run up before a dump again. But if we just keep dumping, then you can keep looking for premiums within the previous week or two in order to get short soybean oil. So really that's it. Bitcoin has finally shown some willingness to take some upside, and that to me is not quite ready to short yet. I did want to see it higher. It might still get higher. Long-term short, yes, I would like to be short Bitcoin again. So I will be signing off now, and thank you all for your attention. I'm coming!